Thanks so much. I know we wanted to get together with Carey Ann, who is our local expert here with CMG Financial. And I know both Angela and I, as real estate agents, often have buyers that are just overwhelmed and confused, especially in this market. So we wanted to just kind of chat with you a little bit today to break down that process for us.
Sure.
So I know, obviously, when we meet with a buyer, we take an individual approach, meet with them, kind of learn about their needs, their desires, and then their next step is to meet with you. But it's important that they, I think, get good information and understand what loans are going to best match with what their needs are.
Sure, absolutely. So true, Joy. Yeah, so there's so many loans that are out there. And, we welcome all credit. And with that, there are specific loans for specific buyers, right? We want to find the best strategy, not only that is going to mesh well with your short and long-term goals, but maybe your down payment, how much you have available for your down payment and or your comfort level when it comes to a monthly payment. And do you meet this guideline or that guideline, right? And so there's multiple different options out there. There's conforming loans, and then there's also non-conforming loans. So a conforming loan is going to be what many people talk about on the internet and on social, is going to be your conventional types of loans, right? And that requires you to have at least a 600 credit score. You're looking at putting at least 5% down. However, if you don't put 20% down, you are required to have something called mortgage insurance. And so the lower the credit score, the higher the mortgage insurance. So that particular loan is not always the best loan depending upon your credit score. And so over the last couple of years, so many sellers and listing agents were thinking conventional because that's the best option or what they thought was to be. And as a lending professional, I would always say, that's not the best loan for this buyer or that buyer, right? What about our veterans? We want them to take advantage because of their hard work and their service that they've given to our country to be able to take benefit of the VA loan, right? And that's going to be 100% financing. And then there's some benefits inside of that. Maybe you're going to be exempt from the funding fee for this reason or that. You're going to have lower interest rates. They're going to be more lenient on credit scores because there's actually, on the VA loan, there's not a credit score requirement. They look at the residual income. They want to make sure that you have enough income to satisfy not only the loan, but your other expenses within your family. Then you look at your FHA loan, which is a loan that a lot of folks use for your minimum down requirements. That's a great loan if you're starting out because you don't have to have a credit score. You can have your parent be your co-signer, and that only requires the 3.5% down. The credit score on that again can go as low as a 580 with 3.5% down, and less than a 580 is allowed if you have at least 10% down. So there's a lot of flexibility there. Now, USDA is an amazing loan as well. I will say it is the most cost-efficient 100% loan option out there. And so we are so lucky in Middle Tennessee that there's so many homes on the market right now that are on the outskirts of the city limits. And that means that they have to be eligible for USDA. It has to be more of a rural type of property. So we're really lucky being in Middle Tennessee. There's lots of those. There are some income requirements. There's some ratio requirements and things like that. But I would definitely, if you're thinking about looking on the outskirts of the city limit, to first ask a lending professional like myself about a USDA loan. Because that's a great option there. First-time home buyers, we love helping our first-time home buyers. If you have a 640 or above credit score, you can get 100% financing, right? And right now with the market, and Angela, you're very familiar, sellers are being so much more negotiable that your closing costs most likely are going to be covered, and then you can really get in with zero out of pocket, right? So that's a huge win for your buyers. So there's a lot of loan options when it comes to conforming loans. Non-conforming, that's when we step out of the box and we help the self-employed, maybe with a 1-year tax return or a bank statement loan, or that investor that doesn't want to show anything and they do a no-doc loan. Just know that when you and I ask less questions, your interest rate's going to be a little higher. Maybe your down payment's going to be a little bit more. But what I would say to all of your viewers is that if you are somebody who's excited to purchase real estate, most likely there's a loan that will fit within your scenario. It's just working with true professionals that have all the options available and know all the guideline options that are out there to really make that a win for you.
Perfect. Yeah.
Awesome.
Yeah.
So we wanted to ask what the pre-approval process looks like. A lot of people, like, what do they bring to the table? What does the buyer need to expect? And what is that going to look like for them?
Yeah, great question. So I always say, first you want to take an application. An application is just asking what has happened in your life over the last 2 years. Where have you lived for the last 2 years? Where have you worked for the last 2 years? They're going to ask you if you receive a salary or if you're on an hourly wage. They're then going to say how many hours a week do you work, and you might say I work 40, but possibly you only work 37, and that can make your loan go from approved to denied. So it's really important that you share positive and truthful information with the lenders. You're going to be able to do that over the apps. Most likely lenders have an app. You and I have an app that we can share, and you can do everything from your cell phone, which is great, or you can talk to an application specialist over the telephone, and they can gather that information. So documentation is something that's really important for you to gather early. I'm a believer in planning out, because if you plan, true success comes. You guys are going to be able to, when you find the perfect property, already be ready to rock and roll, right? Versus wait because you think that you're going to be good to go, which we all do. I mean, we all think we're fabulous, but there's a lot that goes in the process with getting loans approved today. It's an easy process, but there is a process. So I would have you gather all of your income and asset documentation, and that's going to be your last 2 months, your last 2 pay stubs, or the last month's worth of pay stubs if you're getting paid weekly. Those would be your last 2 years W-2s, your last 2 years tax returns. Now, the lender may not need your tax returns because you're not self-employed, but I always say have them ready because they may ask for them. And then I would have you gather all of your assets. So it may be 2 months of your checking, your savings, maybe a 401k that you have a brokerage account here or there with. The more that you can show positive, and it'll just strengthen your file. And so the more that you have, the better, for sure.
Thank you so much.
Yeah. So I think we definitely want to kind of maybe address the elephant in the room, and that is the craziness that we've experienced in the market in the past, and kind of what has now shifted in 2023 and even in the last few months. Obviously, a lot of buyers are reading the news, confused, scared, nervous, or don't even really know what to think. So can you kind of break that down a little bit? I know interest rates are the big in the news, and tell us a little bit about what's going on in the current market today.
Yeah, I mean, that's a great question. I mean, media, depending on how old you are, and many of you are probably focused on what the media is doing and social media is doing. They're going to highlight things to turn your heads, right? They're going to create a lot of curiosity. They're going to share with you that the interest rates have risen the most they have in the last 20 years. And that is a truthful statement. But I will share with you that it's all about making sure that you're creating as much comfort for you and your family. That purchasing real estate with this interest rate or that really is, you just want to focus on what's the best for you and your family. I will say that real estate is something you always want to be purchasing because you can always refinance later. I think the saying that goes around on social, whether it's cheesy or not, it says, marry the home and date the rate, right? Type of thing. And that's really what you are thinking about, because what goes up will come back down. And we can see that in real estate too, right? Over the last year, the values of homes skyrocketed, which means that they'll come back down, and we're lucky in this Middle Tennessee area that the values of home most likely will stay, but you'll see a dip. So right now, this is the great time to purchase real estate. There's a lot more homes on the market, which means that with more inventory, the sellers are being more negotiable. And if they're listing the home today, that means they want to sell, right? Yeah. They are in it to win it and want to sell that home. And so for you as a buyer, I will share with you that there's so many tools that we have used way in the past that we are bringing out. We're dusting them off and we're using them today. That could be our 2-1 buy down, which means that we take your interest rate that you qualify. And let's break down what interest rates are associated with credit scores. So the higher your credit score, the better the interest rate. Right. Every factor of 20. So let's say you're 580, 600, 620, 640, 680, etc. As you break through those thresholds, your interest rate improves, right? And so let's just say that you approve for a blank interest rate. Your 2-1 buy down, which does have a cost associated with that. The lender can pay that within premium pricing of the interest rate. You could work with your real estate agents and negotiate that the seller pay it, or you truly can pay it, where you take the interest rate that you're approved for with your current credit score and you buy that down temporarily 2 points, and then you step yourself into what your final rate will be, right? So for the first 12 months, you're 2 points less. For the next 12 months, you're 1 point less. And then the third year and final for the fix for the rest of the 28 years, if you did a 30-year fix, will be the final and locked in interest rate associated with your credit score. This is great right now for you. You're going to be able to step in, and then let's say 2 years or even maybe this spring,
right?
Maybe this summer. Rumor has it the rates may come down. You can refinance at a really low cost. We at CMG Financial, we have something called a rate rebound. So if you purchase today, you can rebound and refinance for very minimal cost. We waive a bunch of things for you. And I'm noticing more lenders are doing the same because we want to create that comfort for you to be able to purchase today and not feel like you're stuck with one specific interest rate. The ARM products are something that we used to use way back in the day, but many people didn't dabble into it because rates were so low for so long. But you can look at a 5-year fixed, a 7-year fixed, a 10-year fixed. I'm really quite attracted to the 10-year fix because you and I both know that possibly if you're first-time homebuyers out there, you may only be in your home for 7 years, right? That's what I was on my first home. Life changes, maybe our family grows, or just our interest on where we want to live changes. So we're, selling and purchasing anew. And so a 10-year fixed interest rate, depending upon your credit score, could be a whole 1% lower than a 30-year fixed interest rate, right? That's huge. And that is creating comfort and helping you guys really get to a place where you feel good about purchasing real estate today. So
yeah, okay, thank you. So as a student finishing college, I've heard about some financing options for graduating students in college. So what kind of options do you have for, broke college students to buy a new home as they're coming out of college?
Yes, I was one. Were you one back in the day? Yeah,
No,
I was. Yeah.
I
I love that. Hey, I love just hearing people right outside of college purchasing real estate. If I did more in my 20s, I'd probably be different place in my 40s, right? And so I'm a big encourager that you all take advantage of all the options that are available for you. What is great when it comes to applying for a new home is they take your schooling as part of your 2-year work history. So you're going to show the lender your transcripts, possibly your diploma, and that's going to eat up maybe almost all the 2 years, right? And now you have your new job opportunity. So you most likely we'd say to be on your job for at least 6 months so you can show some stability that you actually stayed at the job, that kind of thing, just because you're coming out of college. But you could utilize all the first-time home buyer options that are out there. There are lots of 100% options. Again, like we said before, sellers are being really negotiable so that your closing costs can be covered as well. And that would allow you the ability to come in with zero out of pocket. Now, I would, as a mom, and you as well, we would encourage all first-time home buyers to make sure you have a little bit of money. It's not required. There's nowhere in the guidelines that say that I have to force you to have reserves, but I do want to set you up for success. So as a true professional in my field, I do educate you to make sure you have at least a few months worth of that monthly payment just set aside, because you just never know what will happen. Also know you have to furnish it. You may have a lawn that you have to cut, and you've got different things and different expenses that are going to come up. But getting you into a home with zero out of pocket is a possibility, absolutely, for first-time home buyers with at least a 640 or above, or if you're in the newer world into credit, you can have no score. You just have to show 3 alternate trade lines to include a rental, possibly, maybe a utility bill because you do live in a rental A. Maybe it is a gym membership. Back in the day, we used Blockbuster memberships. You may have some sort of membership that you pay on a regular basis, and it's consistent for at least 12 months. You can use 3 of those and not have a credit score and be able to purchase 100% financing as well. So it's a huge win.
I had no idea about any of that. That's extremely useful.
Yeah.
For people, especially graduating this spring. I mean, I know a lot of people that are like, oh, well, I'm looking into real estate now and I don't even know how to get started. So
Yeah, and let me tell you a little tidbit. So if we were to encourage more investors, I would. You want to, they talk about all these things on TikTok and all the different socials about the hacks for this or the hacks for that. So if you are coming into purchasing real estate for the first time, you may utilize this hack and look at multi-unit properties. And that could be a 2+ unit, so a duplex and or a triplex. You live in one of the units and then you rent out the others. The others pay for the entire mortgage, and so you not only get in with very minimal. Now you are required to put 3.5% down on that particular home, but it's still 3.5% down. It could be gifted from a family member. It could be a savings of your own funds. But again, think about the rents with your roommates can cover the entire mortgage and plus, right? And so you can really work on paying off that loan as soon as possible to position you for future wealth and gains in real estate.
yeah, that's an incredible idea.
Perfect. That's a great hack. So tell me a little bit about, I know we discussed a lot and I'm very optimistic for 2023, excited to get the year started.
Yeah.
There's a lot of positive things on the horizon. What do you see in the mortgage world?
Yeah, so I see that we are on the footsteps of what could be the biggest buying boom here this spring and summer. You sometimes want to follow the lead of the home builders and how many building permits are pulled, et cetera. And I'm seeing a lot, which is promising for us. And so we are blessed to be in an amazing area that I think will always be booming. Nashville is on this chart and that chart for this reason or that, depending on which chart you're looking at. But this is a great place, not only to be in your 20s and have a lot of fun, but also to raise a family, right? And so it's a great transition area as well. Hence why so many people have moved to this area. We're starting to see businesses move here. Rumor has it there's a new burger joint that has come into town. Not only just one, multiples, right? I mean, they're investing multi-millions of dollars, hundreds of millions of dollars to come to Middle Tennessee. That is a great sign for our economy here locally, which means more jobs, which means more growth, which means more homes will be sold. When it comes to interest rates, the rumor has it that spring, summer, we'll start to see a tick down, and then next year we'll again start to see another tick down. Will they get as low as they were before? Possibly not. But at the end of the day, we weren't doing any more transactions when rates were 2.25 than if they were 5.25, right? I mean, people want to purchase real estate, they will purchase real estate. And so you are in a great place to be able to gain wealth for your family here in Middle Tennessee with purchasing real estate.
Perfect. Yeah. Thanks so much. Always great, wonderful information. And again, that's kind of the point of being able to partner with professionals like yourself and really look out for our clients and be able to get them the best possibility and match them with their needs to what's available in the market.
Absolutely. You guys do an amazing job as a team. And it's all about education. I think one thing that you and I both have a true mission for and a passion for is creating comfort and confidence within our buyers. And so you're going to work with Joy and Angela, and they're going to do the due diligence to find you what makes the most sense for you and your family. And they're going to team you up with true professionals that are going to do the same when it comes to our industries. I've been doing this business 22 years, and always thinking 2 steps ahead is so important in all of our industries to make sure that we are really putting you in a loan that not only is the best for you today, but it is going to be the best for you tomorrow. And that's a huge win. And so you are in for a treat working with these 2 ladies.
Perfect. Thanks so much for all the information. Again, if you found this helpful, make sure to like and follow us. And if you have any questions, you can certainly comment below or always find us on our socials.